You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from TheOptionsInsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block. We are, of course, your bi-weekly choice for all things options related. My name is Mark Longo from the OptionsInsider.com as well as from the Options Insider Radio Network. And before we dive into the show proper, let me just say right here at the top of the show that the moment many of you have been waiting at least a few months for, we've been waiting over here much longer for, has finally arrived. Yes, the Options Insider Radio Network mobile app has finally launched. It launched this week, Wednesday, and it launched across a variety of platforms. I don't care what you use. iOS, of course, so iPad, iPhone, iPod, but also a lot of you guys out there use Android. We've got an Android version for you. Even you Kindle Fire lovers, we've got a version for you guys as well. The easiest way to find it is to go to your app store of choice, whether it's the iTunes App Store, the Google Play Store, or just the Amazon App Store. And just type in Options Insider or Options Insider Radio Network. It's the fastest way to do it. We could send you the long links. We have links on the Options Insider, of course, but it's easier. Just go to your app store of choice. Type in Options Insider Radio Network. You will find it. And then give it a try. Let us know what you think. It's only been out a couple of days. A lot of people already kicking the tires and lighting the fires, as they say, and people are loving it. And one of the reasons we really wanted to do this, because there's been so many frustrating complaints from people over the years who want to listen to our shows, and for whatever reason, they're on some obscure device using some obscure piece of software. You wouldn't imagine the number of emails we get on a regular basis. Hey, I love this show, but I can't get it to work with this particular podcatcher on my 3-year-old HTC Model X, and just multiply that times all the different handsets out there, and it gets confusing. People also not loving the podcast app that iTunes created specifically for the podcast category. It doesn't really work that well, doesn't sync very well. So we're getting more complaints on the iTunes side, ironically, as well. It used to be the go-to flagship. So now all those problems are solved. Just go out, download the Options Insider Radio Network mobile app. You can get all of our shows there, subscribe to them. You can stream them instantly wherever you are. You can download them if you want to listen to them later on the car, on the subway, on the plane, whatever you want to do. You can rate them in there. You can create whatever selection, aggregation of our shows you want to listen to in the My Shows section. You can rate them. Easy for you guys to get in touch with the shows now and submit your own questions and comments. Just click on the contact tab in that app, and you can send your own questions for whatever show you want. So we're really looking forward to that. Again, check it out in the App Store of choice. We think you're going to like it. And now let's get rolling with the show proper here. Joining me On the old Option Block All-Star panel are the usual cast of characters, starting off with the man beaming in from the great state of Maine. None other than Mr. Hotcakes. Let's try that again. None other than Mr. Hot Skates himself, a.k.a. the Rock Lobster. None other than Mr. Andrew Giovinazzi from OptionPit.com. Mr. G, welcome back to the program, sir.
It is great to be here. Always great to be here. You got Mark on Monday, when there was a big market move, how excited he is to go in there and start to impart some of his wisdom. But yeah, I'm jazzed. Yeah, and I'm going to go ice skating here right after the show's over.
So is that how you guys are splitting it up now? He gets the 1% sell-offs, you get the 1% rallies?
And well, he gets like anything where there's some action. If there's just kind of a ho-hum days like Andy, you take the ho-hum day. I don't want to deal with ho-hum. I'm too big to do ho-hum. I don't want a meh day. I want a big day.
Should we change your nickname to Mr. Ho-Hum then?
Mr. Ho-Hum. Dum-de-dum-dum-dum-de-dum.
Eeyore. You're the Eeyore of the show.
Eeyore, exactly. Eeyore of the options world. That's all I need.
Speaking of people who are usually generally uplifting with all the news and all the cold water they throw in our faces all the time, we are also joined by the man of fancy hats, a.k.a. Alex Jacobson, the viceroy over there at Options Express. Mr. Alex, welcome back to the show, sir.
Thanks, Mark. Good to be here. Congratulations on the mobile app. I can tell you I just came off a call where we're forecasting mobile use may triple in 2014, which is really not surprising. The average age of people in the marketplace is actually starting to go down. So as younger people are coming in, the use of mobile is just growing at an unbelievable rate. So congratulations on that. That's exciting news.
Yeah, it is exciting. And I was looking at some stats just the other day. We clearly play in what would typically be called the podcast arena, the podcast store in most of these typical venues. And the biggest one is clearly the iTunes podcast store. They did something like 60-odd million downloads of shows last month compared to well over 1 billion apps that were downloaded in that same period. So there's clearly just an order of magnitude larger audience and a much more mainstream audience, I would think, coming in, downloading apps, installing apps. And we never really had any discovery for our shows to that audience. They had to kind of know to come to a site like ours, which is very obviously focused on the hardcore, as well as come to look for us in the podcast store. If they weren't familiar with those two things, it was a difficult road for them to find us. But now we're in that app store, and we're playing that discovery game along with everybody else, and it's pretty fun and pretty interesting. And you're right, I think mobile is we've only just begun to scratch the surface of what we can do with mobile. Speaking of scratching the surface, we've already 10 minutes in, we haven't even scratched the surface of this show, which means it's time for the trading block.
The trading block.
All right, everybody, those screams, those yells from the traders, those bells mean that it is time once again for the trading block, the portion of the show where we break down the action, the excitement, and despite what Mr. Andrew may have said at the top of the show, there was a wee bit of action going on today, most of it to the upside. Bit of a change of pace from what we saw earlier in the week when it was correction central. Apparently, at least for the time being, the brief correction is over. Everything is right with the world again. Most of the major indices closing up over 1% today, up about 1.25%, 1.2%, 1.1%. And by the way, all of you playing the home game, we are recording this on Thursday, February 6th. So bear that in mind when you're listening to the What's Trading portion of the show. The rest of it, all, of course, very evergreen, but this portion, a little bit more timely. And so, yeah, a lot of action. Not surprisingly, we talked on the last show, big sell-off, well over 1%, and yet VIX kind of not really playing ball. A lot of people loading up on upside calls over the last couple of weeks, expecting this downward move, expecting a pop in VIX. VIX not really playing ball. In fact, I think we titled our last show "VIX Drops the Ball." Today, of course, a sell or a rally in the underlying and a commensurate sell-off in VIX, back to kind of where the whole thing began around the 17 and a quarter handle today in the VIX cash. So not really participating that much on the upside, selling off pretty aggressively on the downside. What's your take on today's move, Andrew? Is it about in line with what you expected, a little more, a little less?
Well, I mean, to me, I'm all confused. No,
go figure, sir.
You had an okay payroll number. normally doesn't move the market 1%, but we are in what I think is at option pit, like a higher realized vol environment. It's not a 12 VIX environment anymore. It's like a 16, 17, 18 type VIX, with, it calls for different trading. Because you got the specter, this emerging markets, everybody was freaking out. They thought we're going to go to the mattresses like 1998 again. But really, now that everybody's taken about 2 weeks, I think, to look it over, like, well, maybe it's just Argentina has a current accounts problem and the Turks just have some governmental problems. But really, not much is different. So some of those other like emerging market bonds and stuff, we have clients that have looked at things like closed-end emerging bond funds that were trading, way underwater. Just everybody was freaking out, hitting the exits. And I feel like all that stuff is kind of being pulled back up. Once we closed at a 20 VIX yesterday. Once you're trading at 20 VIX, you need a pretty good reason to stay there. And every day that there's not a new shoe that drops is another reason we don't stay there. It's a phenomenon I call vol fatigue, where basically the implied volatility is kind of outpricing sort of what the current movement is when in a higher state. Usually that's what happens after there's been a big disruption and the vol stays high and everybody looks around and says, are you going to go first? Are you going to go first? You're going to sell it? I'm not going to sell it. You're going to sell it? And that's kind of what we had after that good sell-off we had on Monday. Now, you have the NFP number tomorrow. Maybe people don't want to get hung with a 20 VIX. Maybe they can live with a 17 going into, that's about a 1% move. So that's fair. If you get a good number or a bad number tomorrow, we'll probably, see that type of move. Because the market it's primed itself by selling off so much. Whether you're a bull or not a bull, we did sell off on kind of that bad number at the beginning of the week, coupled with the emerging market thing. So like the market 1-2 punch. So we were not overly short some vol. We put on a volatility strangle about 2 hours ago in our strategy letter. It's working pretty good right now. We have avoided tried to avoid anyway, being overly short volatility into this. But maybe the trip from 17 to 14 might be the time to do it. Especially if nothing really else emerges. So not quite getting our volatility lows that Alex and I thought, but, but there was a reason for volatility to be high. People freaked out. But at least right now, it looks like it's starting to subside a little bit.
And we did briefly dance there for a session or two, so you can at least claim that your prognostication mostly came to pass, if only for a brief fleeting moment.
8% volatility, 1 week volatility in the SPY, the week of the Martin Luther King holiday.
There you go.
Yeah.
You never claimed it was going to be in an active session. It was for 8 minutes on a Sunday evening, but no one's paying attention.
You could have bought the at-the-money straddle going into the Martin Luther King holiday for less than one standard deviation for 1 day for the entire week. It was like $1.60 for 4 days of carry. What it cost, something like it was so ridiculously cheap. And I think the straddle went out about $8.
It's kind of funny. I was talking to someone yesterday about nat gas options, the big futures options over there, and how they were lamenting and also kind of being happy that they were taking the front month implied from like 75 to 100 and then back to 75 again, all intraday over the course of a couple of hours. He said you could just scalp straddles all day long and do pretty well out there. But he was kind of lamenting a little bit because the underlying was moving to the upside, but certainly not enough to justify the panic and then no panic and then panic and all within the same couple of hour session. We're seeing it played out a little bit longer term, a little bit bigger here in the broad markets as well. A little bit of panic and then to the upside, and then all the VIX traders suddenly remember their basic math again, and they remember the VIX equation, and they say, wait a minute, these levels are unsustainable, and then they crush it again, and then, of course, the underlying is following suit this time and giving them a nice rally, giving them a reason to do it. But still, it's kind of shades of that is what we're seeing out in the S as well these days. Speaking of just overreacting and then underreacting and then coming right back in the middle again, we are now joined finally by good old Uncle Mike Tusaw from RCM Wealth Advisors. Mr. Uncle Mike, welcome back to the program, sir.
Always happy to be here. And a day like today, it's just a fun day, you know. You get some stuff to do, and you get to do stuff, as Andrew says.
Now, I was joking with you last time you were on that, your stuff was pretty much, the only green in a sea of red. Kind of a little bit of reverse today, not much, but your stuff is one of the few across the board. There's some of the few reds on my screen. Granted, not really selling off much, mostly unched on the day. But you are playing the role of the inverse / contrarian these days, at least from your holdings perspective, sir.
That's sure what it seems like. Today we had obviously with the overall market going up with our SPY position, our long SPY positions. We're obviously very happy with that. And so I just did the calculations on my financing play to finance the cost of the long hedge put for SPY for our vertical put spreads. I just exited a position right at the close today. So right now going into tomorrow, we're just long. We're long SPY and long the June 174 put. But going into tomorrow for the week, we actually ended up ahead a penny on the week for our financing plays. And with the choppiness of this week, penny's a very happy penny, I must say.
There you go. Living example of doing stuff, coming back to pay some dividends, quite literally in your case.
Yes, most definitely.
That whopping 1 penny dividend. A lot you can do with that, sir.
Well, it was either that or get crushed on so I'll take the penny.
Yeah, anytime
take the penny relative to what the market's done this week.
Absolutely. The very happy penny.
That's a happy penny.
Yeah, you got paid a penny to sleep for most of the week, so that's not bad.
Something like that, yeah.
And of course, I don't want to dive into your segment too much, Mr. Viceroy, but I'm sure a lot of stuff cooking over there at OX these days. Twitter, of course, taking it on the chin. A lot of the OX clientele, of course, loving Twitter these days. A lot of them probably to the downside, but probably a lot of them right in those puts. A lot of buyers too, of course, but I'm sure a lot of put writers out there as well. Of course, Twitter taking a beating today. Post earnings down about 23% last I checked here. 24% on the close, nearly 16 handles, back down to 50 even on the day. Give us a little preview of the Express block, Alex. What kind of action did you see out there in Twitter from the OX clientele?
It was literally two-sided, which is kind of uninteresting in a sense, but the desk today was active in all the story names. It was Twitter, it was Yelp, it was LinkedIn, which came in after the close and disappointed. It was people trying to play the Coca-Cola Green Mountain thing today, and the desk had a lot of conversations about what is Pepsi going to do, which is kind of an interesting conversation. But today seemed to be dominated in terms of what was ringing the phones off the hook with the story names, and in terms of the market as a whole, our classic premium sellers seem to come back in today on the run-up. It's kind of like, what a difference a day makes. But again, keep in mind, we have a lot of core business that is looking for those opportunities to sell premium. And we saw some of that today. We saw sort of it wasn't so much a rally in and of itself, but sort of a calmness came back into the market. And to Andrew's point, I mean, we're only in February, but I do think we will see an 11, 12 VIX again in not the too distant future.
Yeah, good old, you mentioned Green Mountain, good old GMCR. If there was a badge or an award we had for most frequent odd block candidate and just corporate action takeover / speculation / all kinds of crazy options activity name, GMCR would certainly be in it. Almost to the point where we don't really feature them that much anymore because it's kind of almost like, oh yeah, GMCR moving again. What a surprise. We kind of want to put some other ones in there for a change, but they would definitely be in that conversation, certainly. And speaking of names that are in that conversation, I think yet again, it's been a while since we talked about him or since I've had a chance to mock him openly on the show about it. But turns out he might be the one doing the mocking today because Mr. Andrews' love affair with Zynga is back in the green. Zynga just rallying hard off the news that they're slashing some work and workers and all the other stuff they have going on over there, some actual potential for some revenue for them. for a change. Back up in the 4.5 handles. Mr. G, I know you're a Zynga devotee. What's the play these days? Are you still going out with the bullish risk reversals? I think you were talking some strangles last time we talked. What's your love affair with Zynga morphed into these days?
You know what? I got taken out of Zynga. So I don't know what to do with it.
Those heartless bastards. They took you out.
I know. I don't know what to do. I still think, again, I think the best way to attack this stock is to constantly start from from under, basically the underwater type position, selling a 4 put or something like that. There is just not a whole heck of a lot to sell here. So usually what happens with Zynga is they get the good news, it rallies, and everybody looks around, and then they got to wait another quarter for good news, and it usually pulls back, and that's kind of where you jump in. So, I think if we get that sort of pullback, probably going out to June, I would be looking at, maybe selling some of the 3.5 or 4 puts in June. That brings you down to 63.65 again, kind of down in that not a bad place to start. And if we start to get a really little rally, maybe you buy some of the 5 calls, something like that. But I would look at it kind of from that perspective. You really got to go. There isn't much really anything short term. And again, you start with just the put sale. If Zynga starts to catch a little rally, then you go buy the calls. But I don't do the risk reversal just from the get-go anymore. And there I start with a put sale and see what I get. And then if we start to rally, I add calls a little bit.
You're more of a fan of the rolling risk reversal these days. Let the momentum roll you into the risk reversal.
Let them make me buy some calls instead of, you have the risk reversal, then it's down like $0.50, and you're like, oh, I'm an idiot. But
damn it, make me buy those calls. But you're right. I had the same thought looking it over. You really have to roll on out quite a while, out to June, to get anything significant if you're really looking on a premium selling side of the fence. So you kind of have to do almost that diagonal type risk reversal where you're right in June, and then maybe if it starts rallying, maybe you pick up some nearer term stuff on the upside to catch some of that pop. But yeah.
Another thing too is just like a 3.5 level call. 3.5 level call out to April, or a 3 level call. It's instead of spending $4.50 for the stock, you just spend 1.5. So you can buy 3 calls for every 100 shares you were going to buy, and that gets you a good 3-4 months away. You get triple the delta. I mean, it's you use the options that way, and it wouldn't surprise me if the stock got to. I'm like, I'm thinking like 5.25, something like that by June. If everything kind of continues on the path that it's going, it seems like this new executive is really trying to, turn it into a company that starts to generate some cash. So they do have some scale, and they have a lot of users still. So if they could figure that out and cut their expenses, they could make some money, because they do generate pretty good revenue.
So you can get into that 3.5, 5 in April for about 75, 80 cents. That there are worse things that I've seen, particularly because there's almost that much value in that spread right now anyway. So
it's not about so that's how I would trade that thing.
There you go. I knew you wanted to get back into Zynga. It was just too tempting for you, sir. I had to tee it up for you. All right, and that is going to do it for the old trading block. And now we're going to keep on rolling right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, welcome to the Odd Block. This is, of course, the portion of the show where we break down the interesting and or the unusual options activity that's lighting up the old tape. And we're going to start right where we left off with good old Zynga. If you've been reading our site at all this week, hey, we do a few unusual activity alerts that aren't on this show, actually, as well. Check them out over there at theoptionsinsider.com. Click on the unusual activity tab or on the call out there on the homepage. You can find all that stuff, all the great stuff. We get into way more detail on the site than we ever can on the show. One of the ones we highlighted a couple of days ago, this was actually the 4th, was indeed some size risk reversals / collars, depending on how you want to look at it, going up here in everyone's favorite name, good old Zynga. And I say size, I mean some serious size. We saw 50,000 of kind of almost exactly what we were just talking about. The June 3 4.5 risk reversals going up, just ton. There actually is some open interest on these strikes, so about 70,000. They went up. Looks like they went up in about some sizable blocks, about 10,000 lot blocks or so. And it looks like, at least on the surface, given all the open interest, this appears to be closing. What was this guy up to here, Mr. Andrew? Was he buy and put and sell and call to take off the old risk reversal? Which way was he leaning?
Yeah, I think he was leaning that way from what it looked like from the marks. Looks like he was taking his 4.5 calls off and buying in his 3 puts. I mean, if you put that on, in December or something like that, he put it on, I'm sure, for a nice credit. So he's getting a nice debit to take it off. So nice, I think a very nice trade. Get a credit to go in, get a credit to go out. Thank you very much.
That's how you do it. We joke here all the time on this show. People always come, particularly in this segment in the odd block, people are just piling into upside all day long. And there's so many better ways you could do it, just like this. A simple bullish risk reversal. If you're that convinced that this thing is going straight up, then your only risk at that point is the premium you're outlaying for that trade and the time horizon getting it right. Why not take that risk off the table? Write a downside put against it to cover some or all of the cost of that, maybe even get a credit. And then you're putting on this trade for little to no outlay, if not a credit. And then your whole risk goes away. And if you're right and it does take off and not in the time frame, hey, you put it on again. But you're usually not too worried in that scenario of a big move to the downside. This guy obviously taking advantage of that in Zynga and doing fairly well. Some interesting
not doing
stuff.
Bad. Even if he had the collar on and he had the stock, he made but it looked to me like they were selling that call out. So, why would you sell that 3-level put? There's just nothing there. It's kind of dopey. So it would have to be closing the other way.
That would indeed be dopey. Not the dopiest thing we've seen here on the odd block, but certainly wouldn't go up in the savvy column.
No, there's a couple of dopey trades in the odd block.
Yeah, there are.
One that the guy looks like a total maestro. But there's one here. There's a dubious one, I would say, when we did we get to Path. If you want to get to that one, I'm still scratching my head over this one. But.
All right, I was going to start elsewhere, but we can start with Path, sir. Why not? Let's bring it up. Of course, he is talking about NuPathe Inc., ticker symbol PATH, P-A-T-H. This is another odd block special, closing today, $4.18. So, Alex, cover your ears, sir, for the next 5 minutes or so. This is the name that does about whopping 750 contracts a day. Not doing a heck of a lot more than that, doing about 1,200 today. And it looks like the bulk of this pretty much all of it came in one big trade on the March 5 put line. When we wrote it up, we wrote up 500 of these March 5 puts, trading for about $1.25. Total on the day went up nearly 1,955. Given the scattered shot of this, are you thinking newsletter for this one as well, Mr. Andrew?
Yeah, I am. I'm just like, okay, so they're selling all these puts for $1.25. Obviously somebody wants to own the underlying. It looks like a stock that's hard to borrow. So there's some additional premium in the puts. Maybe they're selling the puts and selling stock and capturing the, 40 cents over, but they're probably going to be bought in tomorrow. I'm not sure what they were trying to achieve with this particular trade, and basically now all the puts are trading at a higher price. That's the simple answer to all that. They're $1.30 bid now. A lot of them traded 1/4. So not quite sure what the rationale for it was. Again, that is definitely just it's an odd trade for me. I guess, the only thing I can think of is they want to get long, or they want to try to do a put and stock capture, but with that type of premium, I'm going to just assume they're going to be bought in relatively quickly. But what do I know?
Yeah, it does look that way. Obviously, there is a little bit of juice in these here puts, trading for about $1.30 when, you're right, that is about 40 cents or so of extra juice when the calls are at a nickel. Yeah, interesting stuff going on here. And you're right, they're probably going to be called in pretty quick. So it looks like someone doing a little bit of quick parity math and trying to capture, maybe they get 30 to 40 cents out of that. I doubt they get that, but, you could try it. See how it works, and that's these people obviously doing that. Someone has a newsletter out there saying these puts look good, and let's hit them and see what happens. And maybe maybe they're doing them with stock. I'm guessing. I don't know. I haven't looked at a chance to pour through the stock numbers to see if there is some commensurate stock going up with that. But an intriguing trade nonetheless. And listeners, if you're not sure what we're talking about in terms of parity and all this stuff, check out the website. Check out the OX educational stuff, put call parity, synthetics, all that fun stuff. You'll learn what we mean when we're talking about 40 cents over and all that fun stuff. All right, moving on to the top of the old odd block. We get into the weirder elements every now and then. We're getting back into the uranium land with this one. This is Global X Uranium. It's an ETF, ticker symbol URA, closing today $15.44, up about 2% on the day or so. This is the name that does, about 100 contracts a day, so really nothing at all from an options perspective, doing 5,400 today. Pretty much all of that coming in one mega call trade. 5,200 of that 5,400 contracts going up on this one strike. The April 16s going up 5,000 times for scattered prices between a pretty big range between 45 and 65 cents. Open interest, nothing really to speak of, less than 500 contracts. So this is all opening paper. Went up in small blocks again, so again, it probably looks like on the surface looks like buy right. You think this could be the other side of that coin? Maybe a newsletter putting out there that this is a juicy writing opportunity here.
Could be. I did see a lot of volume. The volume ended up being about scattered, half on the sell side, half on the buy side. And it started out as selling, and then it just basically a buyer stepped into it to scoop up all these calls. So, it's a $15 number on a 25 volatility. So the fact it could get to 16 would be a small miracle by April. I mean, it can happen for sure. It's a very low volatility stock to buy calls in. So whoever stepped in to buy them, that's why I thought it was so strange. It makes sense for a buy right. It's a pretty aggressive purchase for basically somebody that wants to get long. That's why it looked a little odd to me. It's like, a little Dr. Jekyll and Mr. Hyde trade, but volatility was up 4 points. So somebody must've been buying something.
Yeah, they went out 60-cent bid. So granted, the stock rallied a little bit too, so that delta's going to kick in, but still not what you want to see when you're blasting a bunch of them out for 45 in the morning.
No.
All right, moving on. Alex, cover your ears on this one too. We're going to talk here about some looks like a big collar going up in one of your buddy firms. Good old TD Ameritrade, ticker symbol AMTD. They closed today at $30.92, up about 36 cents on the day. This is the name that does some decent volume from an odd block perspective. Doing about 2,500 contracts a day. Normally doing whopping 55,000 today, and a fair chunk of that, I'd say most of it, coming in this big, looks like a call spread financed by puts, however you want to describe it. Out in the Jan 2015 range, we saw 18,000 of these Jan 17 half puts going up against 18,000 of the Jan 24 half, 29 half vertical call spreads for just a boatload of paper going up there, 54,000 roughly contracts in that one trade. Definitely an I love your broker trade. It looks like there's some size here on these strikes. 43,000 open on each of these strikes. Does this look like closing to you, Senior Andrew?
It did. Somebody they're going to love their broker because they made a boatload of dollars on this trade. That's what it looks like. Somebody bought the 4.5, 9.5 spread for probably not much, financed it with the 17 put, and TD Ameritrade went on kind of a little bit of a spree. So I'm just looking at how they put the trade on, but October it was trading $26, and it traded 35 not very long ago. So it looks looking like somebody has made some money on this thing. So
taking roughly half of it off the table and taking some nice profits off the table as well.
I think so. So again, not too bad looking of a trade, it looks like.
Yeah, we talked how much we like the bullish risk reversal. This is another good way to do it. Bullish vertical, financed by a short put. You don't have to go out and just buy the call outright. A lot of great ways to offset that premium. This guy probably got into this for a very favorable level here, and now it's looking pretty strong in his favor. So a lot of great ways that you can construct that old bullish risk reversal, which is why it's one of my favorite go-to strategies. All right, that is going to do it for the old odd block, and now we're going to keep on rolling right on into the Express block.
The Express block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, listeners, you know the drill by now. This is, of course, the portion of the show where the Viceroy takes the reins and gives us a little peek, a little glimpse behind the scenes into the world known as Options Express. Alex, you gave us a taste at the top of the show. A lot of Twitter love, GMCR. Walk us through what was lining up the old tape over there at OX today.
Well, we're going to do two things. We're going to talk about what was, lighting up the phones today, and we did give a little preview into that. It was the momentum names today, and I'm looking at an added list that they sent a couple minutes ago. But basically, it was everything with earnings and everything momentum. So Green Mountain, Twitter, LinkedIn, which is getting murdered in the after hours, but the other stuff, the stuff that's kind of the perennial favorites, Amazon, Apple, Tesla, it was just everything today. And, we talked a couple weeks back about the rate at which new account opening was occurring. And it's kind of interesting that it just seems that the public is back in a big way. And I have the concern that, of course, Monday's events, even though we saw the new account numbers coming in at what I'll call a surprising rate. I know somebody on our marketing team will say, no, that's all their terrific efforts, and they do terrific efforts. But today it was the momentum names and the story names. But I have another piece of news today, and this is something we've also talked about for a while. And I'm going to take a step back briefly and just revisit Idea Hub, because today, in fact, in the last couple of days, we did a big enhancement. But Idea Hub, for those of you who may not be familiar with it, is an idea generation tool at Options Express that will port over to the Schwab mobile platform probably in the next quarter. It's going to go to mobile first. But one of the key areas of Idea Hub is premium harvesting. And premium harvesting looks for quantitative put credit spreads, call credit spreads, and iron condors. And it is, as far as I know, still the industry's only quantitative brokerage-based iron condor finder. In iteration one of premium harvesting, we looked at 1 weekly. We looked at the front month, the first full expiration, the second full expiration, when I mean full, the third Friday, and the quarterlies where appropriate. This week we introduced all 5 weeklies, and not only did we introduce all 5 weeklies, but we changed the metric. In the original metric, we held weekly time at 7 days, and we held it at a constant 7 days. We held the monthly at 30 days, and we held the 2-month at 60 days. So it means we kind of overstated the amount out of the money that the spread we were showcasing was. We've now brought more granularity into there, and we now have 7-day, 14-day, 21-day. The other thing it's done is it means the Idea Hub, instead of showing 40 or 50 ideas, is now consistently showing in the neighborhood of 100 ideas, because it's brought in those additional expirations. And I know it's something that I've had a lot of feedback from people who say, why aren't there more weeklies? There's so much traction in weeklies. And in fact, as a premium seller, I prefer to ride that kind of short side of the erosion curve. So the good news now is we have all the weeklies in premium harvesting. The other piece of good news is by the way, I take no credit for this. It's the outstanding product development team here at Options Express. I just put things down on paper and then they make it happen. And as anybody will tell you, anybody can plan, but execution is hard. So kudos to the execution team. And the execution team is currently working to bring that over to the Schwab mobile platform. As we said at the beginning of the show, mobile business is growing, looks like tripling at the current rate. And I bet in a month I'll say quadrupling. But it'll come over to the Schwab platform. Now, the initial iteration on the Schwab mobile platform will be credit put spreads and credit call spreads. Iron condors will come later, but very exciting because I've been waiting for that, and lots of email I get, and lots of customers have been waiting for it. So an exciting development this week.
Yeah, that is huge news, and you know I've said it before on this show. I know a lot goes into it. You worked on it for a year and a half before it really became live and announced over there at OX. But I'm constantly amazed that no one has tried to rip that off yet from you guys over there at OX Schwab, because it is so awesome and it is such a pure idea generation tool. All the brokerage clients, they all want to come in and they want to see tools that help them, you know, discover good opportunities, and this is purely that. So yeah, congratulations on that getting out there. I think the Schwab clients and customers are really going to benefit from that, because that's exactly what they need. A lot of them are kind of taking their first tentative steps into the options land, and this is a great tool to kind of help them do that and show them some attractive type strategies that are, you know, pretty basic and all the way up to, you know, iron condors and stuff that could help them kind of take those first tentative steps.
Yeah, we are very excited. I'll tell you one ironic story. I had one of our Australian customers on a webinar a couple weeks back, and at this point, Hub is not available in Australia, and it has to do with cross-border regulation and you know, going farther than that, I can tell you that cross-border regulation is a much bigger deal. But let's leave it at that for the moment. This guy was ripping into me because he couldn't get it, so I actually sent him the metric. I actually said, the metric's no secret. Here's the metric. See if you can do it yourself. And the last email I traded with him, he was still ripping into the entire international staff for not being available. So it's an ironic complaint. The complaint was, I can't get the tool and I'm unhappy. So in a good way, I'm happy to field a complaint like that.
Yeah, those are some ones that kind of reinforce that what you're doing over there is actually making an impact when you're seeing that kind of response to it. So congrats on that, Alex. That's great to see, and I'm sure a lot of our listeners are pretty excited to see anything you can do to expand Idea Hub. I know is going to get a lot of traction with our audience. So keep it up, sir. We want to hear more from that kind of stuff coming down the pike. But now it's time to keep on rolling right into my favorite part of the show. Don't tell Alex, but my favorite part of the show, because it's your part, of course, in talking about the mail block.
Now it's time to empty the mailbag and see what our listeners have to say. It's the mail block.
All right, everybody, welcome to the mail block. You know the drill. You can join us on the mail block a lot of different ways. Surf on over to the website, leave a comment on the show notes there. Email questions@theoptionsinsider.com. Just be sure to put question for the option block or the mail block in the subject line so we know where to route it. Twitter.com/options, Facebook.com/theoptionsinsider. A lot of great ways for you to reach out to us. Now, including that mobile app. Hope a lot of you guys will take advantage of that. Hit that contact button in the mobile app while you're listening to the show, while the show is fresh in your mind. You have a question, you disagree with something Andrew maybe said, something like that, and you want to get that question commented right away. Hit that comment button, hit that contact button, and fire off that very, very angry email to Mr. Andrew. All right, kicking it off, we got a couple of fun ones on the old mail block today. First off, we got a question from Mr. Nick Tate. I was waiting for one of these to come in. It was only a matter of time. And he writes, do you guys think Bitcoin derivatives are on the horizon? Would OX trade it? What would the call skew look like in something like that? Well, a great question, Mr. Nick Tate. Of course, Bitcoin on everybody's mind these days. If there is such thing as a fad currency, this is it. It's had some negative headlines of late with some of the high-level Bitcoin guys getting busted for a variety of different things. The government's still looking a little bit askance on the idea of a cryptocurrency, so we'll see how that unfolds. But if just from a pure interest level, if it keeps up in this and doesn't just roll away as some kind of fad, I wouldn't be surprised to see someone try to make some sort of attempt at some sort of Bitcoin derivative, if they haven't even already, in some weird exchange out there that I haven't noticed yet. Nothing certainly of maybe what you're more referring to, Nick, which is the reliable listed type Bitcoin options or what have you. I think we're a pretty long way from that. Maybe, Alex, I'll speak for you. Would OX trade it? I guess if it listed on an exchange and it was a reliable thing and people perhaps looked a little bit more favorably on Bitcoin, it was going to be around for a while and not be rendered illegal at the drop of a hat, then I'm sure OX would probably list it. In terms of what the call skew would look like, if it stays the way it is now, where things can move, 1x, 2x in a heartbeat, I'm guessing that would be pretty, to pull a Larry David, pretty bit up. I don't know, Mr. Andrew, what's your take on what the call skew would look like out there in a Bitcoin option?
It would be very steep. It would be parabolic, much more so than Facebook and Apple and all that kind of stuff. There would be buyers of the Bitcoin options.
Yes, that would make Facebook and Apple look like walk in the park from a call frenzy perspective, I think.
Yeah. Think more like natural gas right now or something like that. I mean, it would be, I think, well, the problem is scarcity delivery. There is no way that's going to happen, at least on a listed U.S. exchange, because there's no underlying.
Yeah, that is a bit of an impediment. Mr. Alex, I'm sure someone over there at OX has to have fielded a call sometime about Bitcoin over the past few weeks. This probably isn't the first time you've heard this type of question.
Yeah, and in fact, we have discussed it, and there are a couple exchanges, but they're not available to U.S. customers. And again, I don't want to start that fight, but to Andrew's point, I mean, to have options on it, you got to be able to buy it, you got to be able to short it, and you got to be able to store it. And right now, there are impairments to that, and there is no transparency, so you would have phenomenal skew. And you would have it on both sides. But it's not something in the works shortly. Man, Bitcoin folks are a lot like gold folks. They're just passionate about it, and you got to love them for their passion. But it just doesn't fit the listed exchange model here at this point. However, it raises the issue about other cyber currencies and what you'd have to do to make it legal and transparent in the United States. And I got to tell you that there are probably 5,000 entrepreneurs in this country trying to figure that out right now. And it's a topic we ought to revisit.
Oh, maybe Vegas will do something with it. Get a casino that starts taking Bitcoin at the blackjack table.
Think about this. The sports betting books in Vegas now are run by Wall Street firms, right? The irony of the evolution of Vegas is that derivative technology has gone out to Vegas. I mean, Cantor Fitz and my old friends at the ISE now provide the technology for some of the biggest sports betting books. So, you never know.
Hey, what is making odds but just being a market maker, really? So that's not surprising. That knowledge base applies over all these other types of products. But so just to summarize then, Alex, no Bitcoin in the Idea Hub anytime soon.
Not in the Idea Hub, but stay tuned because there's going to be more of this. There's going to be more cyber currencies, and somebody will build one that quote unquote conforms. And at that point, you'll get an ETF on it, and you will get options on it.
There you go. Alex leaving us with a little bit of a tease. So take that for what it's worth there, Mr. Tate. And now we're going to move on to a question from user goes by the handle Inchon06, I'm guessing maybe. Korean War vet, fan of the Korean War, fan of MacArthur, I don't know. All of the above, perhaps. He writes, Mr. Mass Destruction sure seems to be pretty happy selling puts. Hypocrisy or just taking advantage of the, quote, Buffett Premium. And he leaks to an article. There's been a bunch of articles of late listeners you may have seen. We touched on this a little bit on the show in the past. Warren Buffett very famously referred to derivatives as financial weapons of mass destruction, implying he didn't really want to use them. And, of course, he certainly has used them when it's been convenient to him, most prominently in writing a whole bunch of very, very long-term puts on a variety of things, mostly of the big financial indexes. Of course, he did very famously in the wake of the 08-09 meltdown write some longer-term puts in Goldman Sachs, and that was a big kind of badge of honor that Goldman kind of put out there. Look, Warren Buffett's writing puts in us. We can't be, they can't be that bad. Things can't be that bad. So, and that gets back to the other thing he's referring to here, that Buffett Premium. It does seem a little bit like he's talking out of both sides of his mouth, but on the other hand, I think if you were him, and if I was him, and people were paying you these ridiculously inflated premium levels for these constructed OTC products that you are then selling to them for absurd levels, and you could probably hedge fairly easily in the listed market, and you probably would take advantage of it too. I think some of the big controversy now comes from the fact that, like a lot of these derivatives products on the OTC side, they're not very transparent, and their accounting for them over there at Berkshire Hathaway seems to be, I think, shall we say, a bit generous. They wrote a lot of puts that probably aren't looking that great on the books right now, and yet they have them marked at or around the value of when they sold them. And so a lot of people are kind of raising some eyebrows about that. Mr. Andrew, I can see you licking your lips, licking your chops on this one. What do you have to say to our friend here, Mr. Inchon, about Buffett and his blasting out of puts?
Well, let's just say, when does Warren Buffett sell puts? Does he sell puts at the market top, or does he sell puts at the market bottom? I think that's the question you got to ask yourself. When he actually goes in, what does he normally extract for his risk capital? Usually,
he takes some
part
good
of an
lifeblood
arm
from the firm.
and part of a leg.
Yes, exactly.
So I'll give you this story. Young trader, me, standing next to the Coke pit. Might have told this one here on option on the show before. So there was a customer selling puts in Coke, right? Goldman Sachs was handling the order. They just started selling. Okay, what's the market? I'll sell 10,000. I'll sell, never ended. Okay. He sold so many puts in Coke, whoever this customer was, okay, that they single-handedly destroyed the volatility, I think, across the whole index complex, because Coke is part of the volatility, in the S&P 500. And they drove, I think, the volatility down to 9 or 10 in Coca-Cola. The first buyer. So I don't know who the person was, okay? But all I know, whoever this person was ended up with a substantial position in Coke, because it wasn't enough just to sell the out-of-the-money puts. They sold in the money puts. Somebody wanted to own it. And it was in 1991, which was probably the recent history dead low of Coca-Cola. Now, I know that there is a guy that owns a lot of Coca-Cola, and he bought it for really low prices. So, and we're going to be doing at the end of the show where we're doing a seminar, but, there is a time to sell puts and there is a time not to sell puts. So, if you can get a ton of money for them and you're selling when you're already at the bottom, that's kind of when you want to be the seller. You don't want to sell puts in Amazon when the stock is $400. Okay. That's not what I would say is the road to riches.
So you're saying you have Warren Buffett shoe prints on your back there. Is that what you're saying there?
You know what? Thankfully, it wasn't me. But I also got my first lesson in juice buying. Essentially is the guy that's on the other side of the sale ticket most likely has more money than you.
That's always a fun lesson to learn when you first walk onto the floor. Yes, a painful one for most people. Alex, I can hear you. You can breathe in. You're pretty excited about this one too. I'm sure you got a few Buffett stories floating around.
Well, I have many Buffett stories, most of which I can't tell. But Buffett started his career in the insurance industry. Selling puts is insurance. When you sell long-dated puts, they're macro bets. They're not volatility bets. They're driven by the swap rate. They're driven by macro issues. And that's something we should talk about one day when we can talk about long-dated options and how volatility becomes less important. But Andrew's point, in the 90s, put selling was a tax-free event. And if you were a corporation and you were selling puts for ESOP purposes or for stock buybacks, the government let you treat the money as tax-free. That isn't there anymore. Buffett's a smart guy. Does he talk out of both sides of his mouth? Everybody on Wall Street talks out of both sides of their mouth. Every major hedge fund, macro investor talks up their book. Buffett is rumored to be selling puts in IBM and Exxon now, where he's made two acquisitions that so far haven't worked, but they're very short term. But he's a very smart guy. And he knows how to manage both the portfolio and the public relations. And many of us wish we could get the deals that he gets. And to Andrew's point, when you're the smartest guy in the room with the biggest portfolio, you can negotiate many clever things. But put selling is writing insurance, and that's a business he knows better than anyone else. And kudos to him for what he's done over the years. He gets it. He understands it. He gets it. What he says, he's clearly talking up his book of business.
Yeah, I think to add to that, in terms of talking out both sides of your mouth, you're right. It's one day you're, and I don't know if it's necessarily talking out both sides of your mouth as well. Well, it is, but I guess what I'm saying is that different times there's different market conditions, and there's times that options and derivatives can be a very destructive thing for many people. But there's a time for him, because he knows what he's doing, that they've been very beneficial to him. Selling puts is something that it doesn't work in every environment, to kind of add to what Andrew was saying in terms of selling those puts on Amazon at 400, so to speak. It reminds me of a story. I know I've told this on the show a million times, but I'll tell it again. There was one trader was talking to another trader and saying, yeah, I did pretty well in 05 through 06, but then once we got to 2008, all those puts that I was selling, I ended up losing a lot of money on it, but the market went down 40%, and who could have possibly predicted that? And so the other trader says to him, the person who was buying those puts from you. So I'll end on that.
A good place to end the mail block, and probably really is all the time we have for the show. We kind of gassed on a little bit, but we tend to do that when we get some interesting questions. Again, you know how to reach us here on the show, and indeed, download that mobile app and try out that contact button. It should make it even easier for you to get in touch with us here on the old program. But before we go, let me check in with each of my cohorts, my partners in crime, to see what they have cooking in their respective necks of the woods. Starting off with you, Mr. G, Mr. Giovinazzi. What is cooking in the land of hot skates and rock lobsters?
The land of hot skates, looking to see if this non-farm payroll number will put the second dagger in the volatility. Maybe we get back to 16 VIX. We're trading 1723. If that's enough to kind of put the shredola on volatility. If it's a good number, bad number, who knows? But I don't think the volatility can hold up here unless we get another shoe dropping from the emerging markets. So that's really the big thing we got on the horizon, at least for news, and if that carries into next week or not. If we get some good feelings moving into next week.
And, of course, you have all those endless seminars and events coming out of Option Pit, right?
We do. We actually have an endless on March 8th. Saturday, March 8th. Funny that you should mention this topic, but we are going to talk about selling puts in an ugly market. You know, what makes a good put sale, what makes a bad put sale, or the conditions that, you know, really you want to sell puts to try to make some money. I think most of the time people are probably too aggressive selling them and then end up with, you know, splattered pancakes all over their face. So there are better times to sell puts, and that's what the webinar, I think it's Selling Puts in an Ugly Market, we entitled it. It's going to cost you money, but it's worth it.
You should just call it the Buffett Put Selling Symposium, and you'll get all kinds of registrants.
It works for him.
All right, thank you for that, Mr. Hot Skates. And now, roll on over to the Uncle Mike Tusaw webinar train. What is cooking when the train pulls into town next week, sir?
All right, on the night of February 13th, I'm going to be speaking on ratio spreads. We're excited about that. We'll talk about front spreads, back spreads, side spreads, lateral spreads, vertical spreads, diagonal spreads. Okay, we're just going to talk about ratios in general. But nonetheless, tune in. It's going to be a great presentation. And then on the 27th of February, we're going to bring back a webinar that we haven't had in a long time. With vol a little bit higher right now, we are going to bring back the webinar, The Condor Flies Again. And we're excited about that. Tune in to rcmfs.com/webinars to find information on those webinars.
Will that Condor webinar be 3 days?
It might be.
That's an old joke. I don't know if I'm sure Alex probably is laughing right now.
It's a Robert Redford joke, yes.
All right. Yes. Alex, take us home before I make any more very, very bad and dated jokes.
Full webinar schedule next week. I'll just showcase 3 of them. On February 10th, a platform and site tour done by Nina. We do that on an ongoing basis for new customers. On February 11th, Dan Gramza from the CME is going to be talking about gold strategies. And February 12th, commodity channel indicators. And Buffett used to bring his own 6-pack of Coke to the office every day, so he didn't have to buy it at the local store and pay the per can price.
The eccentric billionaire. We all have those stories when we made our first billion and how we took those steps to really, save that little extra penny here and there,
I don't remember those days.
All right. That is going to do it for the old program. And on behalf of Andrew and Uncle Mike and the Viceroy and, of course, myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing for the show. And indeed, check out our app. I think you're going to like it. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.